Hello, this is the Chart Profit video, not long after the open on Friday 7th of April. Looking here at the pre-open, the EMini SP, there's been no significant buying or selling, no green or red marked on the profile for 12 days now. Lack of directional bias at the moment. We have some clear levels to work with though. I believe that the current distribution of importance started back in February. The 2-month value area low of that distribution comes in here, 23.41. And as I said pre-open yesterday, if the distribution is still current and developing, we could expect support around that level. However, if price prints time below that level down here, then it would indicate a new development is taking place. But I've said either way, if the price is below the 2360 point of control, which is up here, it's in a weak price location. So as I've said, Wednesday's Wednesday's price action was basically a probe above what was the point of control, the 2-month at 2367. There was a big rejection there. The point of control overnight migrated down to this level, 2360, and then on Thursday that was actually resistance during that session. So we have proven resistance at 2360, and understandably it's the point of control, and hopefully we have support here, 2341, and if we don't see the support, it may be telling us something about the current distribution. So if we look at the live 30-minute bar, the dashed line at the bottom here is 2341. That's the bottom of the value area low. We would expect, if this distribution is current and developing, that would provide support. Any test of that hopefully would be a probe below value, and we'd see rejection and a rally, which thus far we have. 2360 is the point of control, and clearly on this chart that would be the resistance. I did say pre-open today. If we look at the profile yesterday, you can see that most of the time this little point of control for the day session came in 2354, so most of the time yesterday was spent around that level. And the note that I made today says that with regard to the distribution that began in February, I would not want to see too much time spent at this level, 2354. If the 3-month point of control migrated to that level, it would likely be a negative development. We're not talking about a great deal of distance from 2360 to 2354, but that would suggest, if we see 2354 emerging as the controlling price, that this distribution is. So I wouldn't want to see too much time spent here, 2354. Much rather see price printing time above that level, preferably above this point of control up here if you're bullish. Could certainly also do with seeing some improvement in the pulse chart as well. Up here the white bars, as we mentioned, indicating lack of directional conviction. Prior to that, the last significant imbalance was this red, this selling on this day here earlier in March. Just following that, we saw the breadth indicator in the middle here turning red. We're back to neutral, but we need to see this green for positive, and we've seen the price oscillator, the momentum at the bottom here, actually indicating trend down by being below zero. Better to see that back above zero as well. So there is some work to do here. Not a bullish looking pulse chart at the moment. You can see here the New York breadth indicators through Thursday. You can see most of these close to what I term neutral, 50 on this indicator, 0 on this indicator, 0 here. All of these indications, breadth, imbalances on the profile, definitely indicating a lack of directional bias and leaning, I think, slightly to the bearish side. Let's look at the sentiment indicators. This is my version of the right x-assets ratio, up a little on Thursday, back above 10 here, and we're off from this peak up here above 14. Only the second time we see the index above 14, or the ratio above 14. Previous time was back over here. This time it came on the top up here on March the 1st. Back here it was close to the top, and then we went to a kind of ranging market for a while before it fell heavily here. Looking at the public poll from AAII, Bulls percent was actually lower at 28.3. That's a 22-week low. Bears percent was higher at 39.6. That reached 46.5 4 weeks ago, which was the highest bears percentage since the market low in February 2016. So a slight increase in bears this week shows us negative reading here on the indicator, the red bar. That's the net position, the 4-week moving average of that net position in black is below zero, as you can see. Most recent low in the market here, late last year, came with that 4-week moving average of net a little lower than it currently is. Investors' intelligence, the bulls percentage was higher at 55.8, up from the previous week's 49.5, which was a 20-week low. So the previous week here, bulls percentage reached a 20-week low. 6 weeks ago, up here, bulls percentage reached 63.1%. 6 weeks ago, that was the highest bulls percentage since 1987. So sentiment was peaking around this time. There was a big 1-week outflow reported by Lipper US Fund Flows. They reported equity funds, including ETF outflows, of 11.9 billion this week, the week to the 5th of April. That's the largest single weekly outflow in 15 weeks. And if we look at the 4-week flow, this black line here, 6 weeks ago, again at the top here, that 4-week flow reached 30.4 billion, a pretty elevated number. And in fact the highest since November 2014, but that has actually fallen quite rapidly, and we're back actually in negative territory at the moment. So over the last 4 weeks there's now a net outflow of funds. Just wanted to show this. This is the S&P 500 commitments data. Just wanted to look at this number up here from the commercials, usually called the smart money. Their net position at its lowest for at least 6 months, indicated by the black line here. So we have commercials net position heading lower, the large speculators net position heading higher. That's okay and absolutely fine. The large speculators, the funds tend to be trend following. You need to follow these guys apart from when we hit an extreme, and this is heading that way, and the commercials heading down to a negative, possibly a negative extreme here. So just interested later today to see how the new numbers affect this chart. And we're looking here at the T-bonds commitments data, and you can see the reverse situation of that. You can see back over here that the large speculators trend had been down, that's fine. Commercials trend had been up, that's fine as the market's falling. And then we hit the extreme over here somewhere, and over here the highest commercials net position for years, the lowest over here for the speculators for years, and that comes at about this point here. You can also see that at this point here we hit even more of an extreme. Same thing here, close to here. So that's the way I follow the commitments data. You follow these trend followers at the blue line, except for the extremes where you look for reversal. So currently longer term, this is long term data, these indicators looks pretty good for bonds and not so good for equities right now, although that could be pushed a little more. Okay, we'll look at some charts. This is the spider 3-month point of control we've talked about before, 234.40, this red line here, and that is support currently, and we've said price below that level would be an indication of weakness. Not that we're printing very far above it, but expect support here, and the minor resistance comes in at this halfway point off the high. Apart from this spike here on Wednesday, this week's price action has been between those two levels. Okay, this is an important change here on the Russell 2000 chart, sampling the data on a 30-minute level back for a few months. The 16-month controlling price has moved to 136, and it is currently above the current price action. So we need IWM and the Russell 2000 ETF to improve a little. Back above 136 would put it in a stronger, in fact a strong price location. And currently at the end of this week we're printing today so far below that level. So again, like the EMini that we looked at earlier, price a little bit higher would change the look of the chart in terms of strength, weakness. And again, the controlling price on the FTSE 100, the UK FTSE 100 index, changed slightly. It's now 72.95. That's now the 5-month controlling price. There's been some probes below it, as you can see, but not a day's bar printed below it. Price below this level. Put the index in a weaker price location. So again, FTSE holding on, up a little today, Actually at the moment slightly higher on the week. No local reference level for the DAX, the German DAX. The closest we have is the 3-month, which is quite a bit lower. Relatively Europe holding up pretty well, I think. It's been an interesting chart, this one, TLT, with the important controlling prices moving around. We had support here on what was the point of control at 117.15. The major has now moved to 119, so that should be big support from here on in. The controlling price of the current distribution is at 121.63, and today we've just popped above that level. So if price can hold above this level, print some time, puts the T-bond ETF in a stronger position. And today GLD, the gold ETF, has done the same thing. It's popped above its major, which is 119.84. In a simplistic interpretation, these two charts, the bonds, gold, moving into stronger price locations, could be interpreted as a negative for equities. So price holding above, printing time above 119.84 puts GLD in a strong position. Quick review of the USO oil fund ETF chart from this important low over here to this high. We have support here at the halfway point, and we've seen a rally from there. This chart remains in a weak position if it prints below 1144, which is the major up here. The first level of resistance from this low was this dotted line here, which is the halfway point of this high to this low, and we're just again popping above that level today into a stronger position. This is the big level though, up here, 1144. As long as USO is printing time below that level, longer term, it's not in a strong price location. Dollar index has rallied last couple of weeks. It's now probing up towards a 101, which is its 6-month, and clear resistance on this chart for me. Chart currently overbought on the daily and approaching resistance. If we're going to resume an uptrend, it will ignore this and we'll start printing above that level at 101. Interested to see what happens there. This chart, the Euro FX chart, kind of the opposite to the dollar index, now approaching its support, the 7-month at 105.97. And GBP, the pound, heading back to this support, a dotted line which was the previous support in March here, which is the halfway point from this rally high to this low. Price below that level would put it in a weak price location. It is printing below its the most important controlling price we have here, 124.78, which is the 15-month. So any price below that level is a weak price location. Price below this dotted line goes below the minor support and puts the pound in a weaker price location again. Just over an hour into the trading day, the EMini currently printing, if you remember, right where I don't want it to, 23.54. Don't want to see too much time spent there. Much better for the bulls if we can overcome this dynamic resistance. It moved down to 23.60, and going into next week, we'd love to see the EMini printing above that level. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.